Welcome, ladies and gentlemen, to Commodity TV. And it's day 3 of the Precious Metal Summit here in Zurich. And it's our honor and pleasure now to talk for the first time to Blackstone Minerals. And Scott Williamson, the CEO, is here with us. Good morning, Scott.
Good morning. Thanks.
How are you? All good?
Good, thank you.
You enjoyed the conference so far?
Yeah, it's been very good. This is our first one. So, it's been very good.
Glad to hear that. Fantastic. You are an Australian company, Australian listed. It's the first time. Please give us a short overview on the company.
Yeah, so we're based in Western Australia, but our flagship asset is in northern Vietnam. So it's a previously operating nickel mine. We're looking to restart the mine, but also build a downstream refinery, which will convert the nickel concentrate into the chemical products for the lithium-ion battery.
Wow, that sounds like a good game plan, especially Vietnam. Actually, you are the first company I'm interviewing who is active in Vietnam. How is it there to work?
Yeah, the government's been very supportive. There's a long history of mining in Vietnam. There's only been a few foreign investors into the mining industry, but they're really incentivizing foreign investments. So they've got low tax rates in the early years of the project. So the government's been very good. And the benefit is that the previous operators left a good legacy behind. And so we've come in and we're working on that legacy. And they did a great job of looking after the local community and the environment and paying all their taxes. And so, so the government's really sort of rolled out the red carpet because of that great work that the previous owners did.
Okay, super. So as you said, you have already a red carpet to work on. That's great. Status is definitive feasibility study for, I think, both the project and talking the mine and the refinery. I like the combination that you want to have a mine and a refinery because you can then also do the end product, right?
Yeah. So there's a couple of reasons. The government is really incentivizing us to go downstream, and so the preference is to do the value add in country, and that's really because of the low operating cost environment. We've also got abundant renewable power, so low power costs, competitive labour costs. So it's a great place to go downstream and really add that value in what is a low cost jurisdiction.
Okay, super. About what size we are talking for the mine and also for the refinery? And let's say, what would be the CapEx? What is the plan to finance that? Please elaborate a bit on that.
Yeah.
And where do you see maybe possible costs? I know it's a bit too early, but just to give us a little bit of an idea.
No worries. Yeah, so the mine will produce around 20,000 tonnes per annum. The refinery will be
nickel.
Nickel, sulfide. And the refinery will produce twice that, so 40,000 tonnes per annum. So imported feedstock will come from half of our refinery. So we're looking to bring in around 20,000 tonnes per annum, and that could come from Australia or Canada or anywhere in the world. So the refinery will be twice the size of the mine, and we're looking around about $1 billion. So US $1 billion
For both.
Yeah. So in that sort of order. Yeah. So it's it's a mine and refinery. So we're at that final stages of studies, just locking in all those costs. But it's looking strong on the economics, and it's because the products that we're producing in the refinery trade at a premium to the underlying metal prices because they are battery grade chemical products. So we're looking at combining nickel, cobalt, and manganese in a ratio of 8:1, which is the I suppose preferred chemistry mix for the lithium-ion battery cathode.
Fantastic. Wow, that sounds like a real good game plan. I need to have a much deeper eye into you.
All right.
That's cool. Super. And cost-wise, meaning nickel is today, I think, something like, what is it, $8.50, $9 per pound?
Yeah, so we're sort of looking at it in a dollar per tonne basis. So it's around $18,000 per tonne, the current price. You do get a premium, as I said, for the chemical product, so it's a slight premium. We can get our costs around sort of $10,000 to $12,000 per tonne.
So that's still a healthy margin in a weak market.
That's right, and so strong margins, and we're confident we can be lower costs than our peers in Indonesia, and that's where a lot of the supply is coming out of, and we're confident we'll be a lower cost producer than the Indonesian supplier.
Okay, what would be the projected mine? Life of mine, and how do you intend to finance it? Would, for example, Vietnam say, hey, you know what, guys, that's fantastic. This is for taxes, workers, meaning jobs created, that we give you like 20-30% incentive, or how does that work?
Yeah, so it's, I suppose, 10-year mine life at the moment. We think there's a lot more to be found, and we're focusing more on development now, but we think over time we'll find a lot more. It's some great geology there. For the way we're looking to finance is we're looking to bring in a partner, and that'll be a downstream partner from either the lithium-ion battery industry or the car manufacturing industry. And so they will come in for up to 50% of the project. So we'll actually sell down the project to a major player. They'll bring a lot of the funding, but they'll also bring some of the debt as well. So the debt will be linked to the country of origin of that partner. For example, we've done a lot of work with Korean Development Bank, for example. If we end up with a Korean partner, then they'll be backed by Korean export credit agencies and development banks. So that's the funding strategy is really around a partnership, and we're looking to lock in that partner over the coming months.
I can imagine that maybe you should talk to Stellantis.
Yes.
Because they are hyperactive. Yeah, we interviewed yesterday a copper company where they invested in, and I think they're doing the right stuff. I saw also in your presentation that you have carbon capture probably potential and rare earth elements potential. I think this is something outside of China becoming increasingly more important, right?
Yeah, so the tailings that we produce from the mine will have the ability to capture and sequester carbon. So that's a real benefit. And so that we're looking at that through our life cycle analysis of carbon. We're using a group called Minviro. So it's very important for us to get to net zero as quickly as can and potentially from day one. And so there's plenty of opportunities on that front. And I suppose operating in Vietnam for over 4 years now, the rare earth opportunity sort of came to us, fell on our lap, and some of the best rare earth deposits in the world, and we're looking at going into an auction process, and that auction process is not available to everybody, and it's only because we're operating in Vietnam that we have that opportunity. So yeah, plenty of opportunities in Vietnam, and that's because we've been operating there for over 4 years now.
Great. Last but not least, we need to talk about money. Yeah, what is cash in the bank? Are you financed for next year? Meaning, is that the completion of the DFS, is that all financed until you go into the project finance?
So yeah, last quarter we had about $7 million. We're spending about $1 million per month. So we are sort of getting to the end of our current cash. But we've got enough to sort of get us through those final studies and start that joint venture process. The idea is hopefully we can get a joint venture partner before we have to go back to the market, but we'll have to see how we go. It's a tough market at the moment, and we're always looking for new investors. But yeah, at the moment, focus on that study and that joint venture process.
Yeah, but honestly, if when I look at your reports, when I read through, I had the feeling a lot of companies must knock on your door because you do exactly what they need.
Yes.
Outside China.
Strategically, we have a lot of interest. Unfortunately, that's not flowing through to the share price. But behind the scenes, yes, we talk to a lot of the major players in the industry, and they're all in the data room waiting for that data from the DFS, which is we're starting to drip feed a lot of that data in there now. So they can now take their view on the value of that 50% sell down, and hopefully we'll get some bids in very soon.
Super. Then I wish you luck, a lot of luck for that, because I think you deserve it. You do the right stuff. Pleasure talking to you. Thank you very much.
Thanks for having me.
Thank you. Yeah, ladies and gentlemen, it was Scott Williamson, the CEO of Blackstone Minerals. You heard it, Vietnam. That's the first time we are talking about Vietnam. And honestly, I like the combination a lot of a nickel mine and a nickel refinery, and for the longer term future, rare earth elements. And this outside China, this is something which is of real importance for a lot of battery makers, car makers, etc. That's exactly what we need. And the company is in the completion of the definitive feasibility study. They still have the cash to do so. That's also important, and I'm pretty sure they will soon get a very nice partner here. Really check out the company, because in those markets you get such high quality projects for a bargain level that is interesting for investors. Of course, the old investors might not like it, but you can buy that cheap. Really check out Blackstone Minerals. I will do so definitely. Thanks for watching us, and bye-bye from Zurich.